Hello, house hunters. It's Yvonne Hunt with House Hunting Solutions. And I know that if you haven't bought a house in a long time, or if you are a true first-time home buyer, you know what? There's a lot of verbiage you're going to hear, and you're not always going to understand it all. So I wanted to take a moment in between talking about down payment assistance to just get a read on what all these terms mean. So I want to start with the term first-time home buyer. What does that mean? Does that mean that I've never owned a home before, or what?
All right. So yeah, all the jargon that goes through your head whenever you're trying to buy a house. Sometimes the professionals even forget that they're talking to a rookie, a newbie, or a first-time home buyer, and we throw out all this jargon and expect you to understand it. So let's get you familiar with some of these terms so that you, if you hear it whenever you're doing through the process, you may be familiar with it. So first-time home buyer. Again, the common person would think, oh, I'm my first-time home buyer. That means in my head that I've never owned a home before, right?
Right.
That's actually not the case.
Okay.
So first-time home buyer, by definition, actually means not to have owned a home in the last 3 years. So if you've owned a home 4 years ago, guess what? And sold it, and you're now a first-time home buyer again.
Okay. So how do you figure out whether or not they're a first-time home buyer? Is it by their tax returns or what?
So typically, yeah, there's a few ways for us as a lender to find out if you actually been a first-time home buyer or not. So you can't have sold a home last year and say, well, they're not going to know. I'm just going to tell them I'm a first-time home buyer.
Yeah, don't lie.
Yeah, we find out these things. We run you through a fraud system whenever the loan's in application. We see on credit if you had a mortgage before, when that mortgage was paid off. We pulled transcripts from the tax records to see if you have mortgage interest write-off. So there's a lot of things that we look at to see if you've owned a home within the last 3 years, and we can ask you about it.
Mm-hmm. But the bottom line is, if you've owned a home before, but it's been more than 3 years, you are now reclassified as a first-time home buyer, right?
That is right.
Okay. So I go out there on the internet and I want to see what my clients are seeing. They're saying, oh, I went on this mortgage payment calculator on Zillow or wherever, right? They find them. And it says, my principal and interest on a $300,000 home is X. Well, guess what? There's more than just principal, which is the amount that you borrowed, and interest, which is the amount that you paid for the amount that you borrow over time. There's a couple of other components, right, Dave?
Yeah, in the mortgage world, we call it P.I.T.I. Principal, interest, taxes, and insurance.
Okay.
So there's a lot of things that make up your total mortgage payment. You're going to have to pay back the principal and interest of your loan, but you're also going to have to make sure that you pay your property taxes on an annual basis and your homeowner's insurance. And what we do as a lender, we establish an escrow account to help pay those items on an annual basis for you. So every time that you make a mortgage payment, you're going to be paying us 1/12 of the property taxes and 1/12 of that mortgage insurance as part of that mortgage payment, in order to build up that escrow account so that we can pay those things for you next year. So you are going to have a payment of principal, interest,
taxes and homeowners insurance.
Mm-hmm.
Okay. And all those things are necessary when you use someone else's money, right?
That's correct. I mean, with anything, there are guideline things that may differ. So, if you put down enough money, we will let you waive that escrow account, and you're going to have to pay your own taxes and insurance. And that's typically at a 20% down payment option. So if you put 20% down or more on a conventional loan, you don't have to have an escrow account. So you're going to be responsible for paying those taxes and insurance. So your payment would truly only be made up of a principal and interest payment.
Okay, so don't do that. Get your escrow account, right? Because if you skip a payment on your homeowner's insurance and a big storm comes through and rips off your roof, you're going to have to come out of pocket because your insurance has lapsed.
Or if it's that time of year and property taxes are due and that tax bill's pretty large and you don't have the money to pay it, guess what? Now you're in trouble because it goes a lien on your property.
Well, not only a lien, but, taxes takes precedence over everything else. So literally, if you're behind in your taxes, the county that you live in can put your house for sale on an auction so that they can recoup the taxes you didn't pay. Get an escrow account, but
that's what we're here for.
Right.
We're here to guide you if it's a right thing to do or not.
Right. Principal, interest, taxes, and insurance. So that's your complete mortgage payment. So here's one, Dave. What's the difference between down payment and closing costs?
Well, down payment is based on the purchase price. We are going to require you to make a down payment on that loan based on your purchase price. For instance, again, a conventional loan, you could put down as little as 3% for the down payment. So whatever that purchase price may be, it's 3% of that purchase price for the down payment. However, that is not your only cost involved in this transaction. You're going to have closing costs with these loans. There's many entities that make up the mortgage process, the loan process, the buying process, and they all have to get paid, and there's all fees attached to them: appraisals, closing attorneys, title insurance, owner's coverage insurance, state tax fees. All these things make up your closing costs. So at the end of the day, whenever you go to the closing table, you're going to have to come to the table with your down payment and or possibly closing costs. And I say and or because there are some ways to maybe get seller help to pay these things, but it's never a guarantee.
Right.
And it's also depends on market conditions too. They
That's
may
true.
not be willing to do so. So in going into the home buying process, you kind of always have to, sometimes play worst case scenario and make sure you take that in consideration.
Right. So again, this is a series on down payment assistance. So you may be able to get down payment assistance to help you either with your down payment, and in some cases, they allow you to use that grant, the money that you get with the down payment assistance program, to cover some of your closing costs. So stay tuned. Make sure you subscribe to this channel so you don't miss any updates. But I just wanted to pause for a minute and make sure that we talk about some of these terms that you're going to hear during the home buying process. So credit score, everybody knows what that is, right?
That's right.
Right.
And how many credit scores do you have?
Is this a quiz?
It is.
We have 3,
right.
Unless you own a business in which you have a bunch more. But let's talk about the consumer who's trying to purchase a house. You have 3. So there's Experian, Equifax, and TransUnion. Which one do you use?
Yeah, exactly. Which one do we use? There's 3 of them. So how do we determine which one to use to qualify you for a loan program? As a lender, we're going to have to take all 3 in consideration. Now, let's get sidetracked for a second. If you're very limited on credit, there's a possibility that one of these credit agencies may not even produce a credit score for you. So you may only have 2 credit scores.
Really? I didn't know that.
It is a possibility. So what we do, though, is we take a look at we pull the credit from all the bureaus. And if you have 3 credit scores, we're going to take the middle credit score of the 3 that report on you. So if you have a 700 credit score, a 710, and a 720 for all 3 of your credit scores, we're going to take a look and say, okay, we're going to use the middle credit score as your qualifying credit score for this particular loan program. So that would be a 710 in that scenario I just mentioned before. So we'll take that 710 as your middle credit score, see if it fits into the loan program for qualification purposes, and use that accordingly. Now, if you only have 2 credit scores, then we use the lower one of the 2.
Okay, so let me ask you this, Dave. Now, it's possible to have good credit, right? Like, say you have an 800 credit score. Does it matter how you got that 800, or do you need certain types of what we call trade lines? Like, do you need a car payment? Do you need a credit card? What do you need?
Yeah, see, so we're already starting to dive into that rabbit hole. She said trade line. What are we talking about, right?
Yeah, right. Okay. What's a trade line?
Okay, so exactly. So you may have an 800 credit score, but guess what? You just started establishing credit 6 months ago.
Oh.
Well, you've made 6 payments on time. So these credit algorithms go in there and say, wow, you got great payment history, 6 on-time payments, 800 credit score. Well, guess what? We're going to take a look a little bit deeper into that. So if you're limited on credit and you only have credit established for 6 months, we're going to see that on your credit history. You're going to have what we call trade lines, really just creditors. So if you have 1 or 2 credit cards, we call those trade lines. You may have 1 trade line, 2 trade lines. And then we're going to take a look at the depth of that credit. So we like to see 12 to 24 months on these things, at least 3 trade lines established.
See, 3 trade lines.
We like to, at the end of the day, we just like to see some credit history, something deeper than a 6-month history on your credit.
So how long do you need to have credit before you start looking for a house?
Bare minimum 12 months on multiple trade lines, right? So multiple creditors. And then that's when you start. I don't want to make anyone scared from calling or reaching out with any types of questions or think, well, I can't qualify. That's never the case in anything we speak about, because there's always alternatives and we can dig deeper. You may be able to get access to a co-borrower, right? Or a family member that may co-sign for you.
Okay.
Even though you're limited on credit, guess what? Now that new entity comes in and it may put you in a situation where it can get you approved.
Okay. All right. Let's not go any further. I'm sorry about the trade line comment. Okay. Just different people that you owe money to. All right. Let's see. What's another one I hear all the time? I hear DTI all the time. What is that?
So DTI, again, you can fall into a deep rabbit hole on DTI, but we're going to keep it clean and simple for you. So debt to income ratio is what we look at, DTI, debt to income. We're going to take a look at how much you make gross a month. So your gross amount of money, not your net after taxes, your gross before taxes. And we're going to use a percentage of that money to qualify you. We'll see if you can afford this home and if you can afford all your other debts, including that on a monthly basis. So we're going to take a look at the house payment, your current monthly debts, credit cards, car payments, student loans. And we're going to make sure it fits into a percentage of your gross monthly income. And it's typically, on a conventional loan around the 45% mark. And FHA, you can get up into the 50s a little bit, but depending on your situation, we'll determine which one fits better for you. So how much your monthly payments are with your house payment compared to your gross monthly income.
Okay. All right. So debt to income ratio. Well, how much you make gross, how much you have going out.
That's right.
Is that it?
That's right. And we cap those at 45, 50 because we know you have other things that you got to spend money on to live. You got gas to put in your car. You got groceries. You got utilities. That's where that other percentage
daycare. Yeah. Yeah. Okay. All right. I was going to ask you a question about a zero score, but I think we'll do a whole video on zero score.
Sure.
Just backstory.
Information on that.
There's backstory. When my husband and I bought our house in 2015, I had no credit score because I paid cash for everything, right? My husband had the credit score. We were able to qualify for a VA loan. Dave said, I would put you on this loan, but you're not going to help because you don't have a credit score, right? That's not meaning you have bad credit. It means you don't have any open trade lines. So I paid cash for my car, right? I paid cash for everything I purchased. While you would think that would be a great thing, right? Yeah, not so much. Dave said, you need a car payment and a credit card. I said, say what? Okay. So thanks to you, I have debt now, but I also have a 750 credit score. Okay. Right. So that's a little backstory. And I am going to do a video with Dave about that. So for you people who are cash hounds, come on down.
Cash is king, right?
Cash is king, except when, in order to get debt,
money.
Right? Unless you got $500,000 cash, in which case just call me. You don't need that. But anyways, contact us. Thank you for your time. If you have any questions, or if there's a term that we didn't cover, put it in the comments or hit me up on Facebook. You can message me. You can put it in the comments. Hey, thanks for that video. But what's this? Like you might have a question about
private mortgage insurance. What's PMI?
What's that, right? So we could cover that, but we want to we respect your time and the fact that you tuned in. So like, share, subscribe so that you don't miss any updates. You can reach me if you have a question, you want to call, text 404-587-5661. You can reach Dave at 404-925-3128. You can hit me on Facebook. I'm at facebook.com/House Hunting Solutions LLC. You can see me on YouTube if you haven't already. You can go to YouTube in the search bar, put at Yvonne Hunt Atlanta Realtor. Again, thank you for your time. All that contact information will be below in the comments, and we look forward to speaking with you. Tune in. See you in the next video.